Welcome to Trading Nation, folks. I'm Eric Chemi. Today, let's take a look at retail. The XRT Retail ETF closing out its best week of 2017 after a slew of positive retail news. Let's get the next move going with our Trading Nation team. Today, we've got Mark Tepper. He's with Strategic Wealth Partners, and Matt Maley, of course, with Miller Tabak. Mark, you're new to me on Trading Nation, so why don't we start with you? Let's get your thoughts on retail.
Cool. Yeah, so retail looks good right now because the consumer is strong. Wage growth is up year over year at about 2.4%. Unemployment's low. Balance sheets are strong because people have been paying off their debt, and tax reform would only help that even further. So, even with all that, though, the retail environment is very challenging as the brick and mortar businesses are getting crushed by Amazon. So I think what you're going to see over the course of the next few years is the extinction of the dinosaurs like Macy's, the companies that have absolutely no value proposition whatsoever other than being the low-cost provider, and you're going to see further dominance by the innovators. So, Walmart, I believe, has done an excellent job of positioning themselves to compete with Amazon. They're doing a great job of adapting from just that brick and mortar kind of business to more e-commerce. Online sales just increased by 50%, and they now have more than 3 times the items on their website than they did a year ago. So they're also continuing to make good acquisitions of e-commerce businesses like Jet.com. They're growing in the online grocery and delivery market. So, they're one of the few retailers that we think gets it and is evolving. So if you want Amazon-like exposure at less than 10% of the cost, I think you can get that with Walmart.
It's interesting because yesterday or the other day we had Kim Forrest on from Fort Pitt Capital, and we were talking about retail a little bit, and she said she thinks Amazon gets overplayed in the financial community, in the Wall Street community, because a lot of us use Amazon. We buy products off Amazon, maybe more so than the rest of the general public. So I just wonder about, the three of us having this chat, like maybe we're a little bit more advantaged than the regular person in America who still has to go to a brick and mortar store, maybe doesn't have a doorman waiting for them to deal with their packages. What are your thoughts on just that kind of contrarian thesis?
Well, I would agree with it. I know I'm addicted to Amazon Prime. I don't know about you, but it makes purchasing whatever you want to purchase very, very easy, right? I think that's pretty realistic. I do think that in the financial community, knowing what we know about Amazon and the ease that it brings to just the shopping experience in general, I could see where that has some validity.
Matt, I want to turn to you. A topic that we've had a chat with around my colleagues here at CNBC is the idea that do people buy retail stocks based on the companies they actually shop at? So does your opinion of Home Depot or Costco or Walmart stock get affected by you actually personally shopping there? Is that something that you've come across in any of your research or trading experience?
Yeah, I think so. To a certain degree, it's kind of funny what Mark said about Macy's. I keep worrying that they're not worrying, but wondering if, how long it's going to take before the Thanksgiving Day parade is sponsored by a tech company rather than Macy's.
It's like the Venmo Thanksgiving parade or something like that, right?
Which would be too bad after so many decades of tradition. But as Mark said, that they're dinosaurs, and that's why I think it's going to be very important as we move forward to be discriminate between what you're looking at, what you buy, and what in that area, not just buy the whole thing. I mean, just briefly on the chart, we were talking about the XRT you mentioned earlier and how it's rallied so strongly. That's a great move, and it's getting slightly above its 200-day moving average. That's great, but it's gotten there a couple of times this year, only to roll over in a significant manner. So part of this rally seems to be kind of short covering, where a lot of different stocks that have been beaten down badly are starting to bounce back. But I'm not sure that those rallies can really last for very long, even if the consumer stays strong, because of the way their shopping habits. You talked about Amazon and Walmart.
Yeah, because that chart to me, if we get to put it back up again, that looks to me like a classic. You want to sell this little up move as you hit that purple moving average line. Is that right? I mean, this just looks like a textbook sell just on the chart.
Yeah, I would agree with that. I mean, it could change. I mean, it's like anything else. We're kind of in that wait and see move because it's gotten overbought and it looks like it wants to roll back over again. if somehow we have a blockbuster holiday season, one thing I would say also is that seasonally, the XRT tends to rally through October, the end of October into November, and then the week after Black Friday, it tends to roll over. Now, maybe the way Amazon has impacted Black Friday, and Black Friday isn't as important as it used to be, maybe we don't see that same kind of move. But if history is any guide, it should roll back over just for seasonal factors as well.
And then, Mark, I just want to end with you real fast. Is there a consensus retail trade that you're looking at maybe the next 3 months, let's say? Or not consensus, contrarian. That's what I meant to say, contrarian. Just something off the radar of most people.
Oh, contrarian retail. Not really, no. I mean, we like boring, right? And Walmart is that boring stock that's intriguing to us right now because they're acting a bit contrarian in that they've got the ability to innovate, right? And my take is that if you're not innovating in retail, you're going to die. And that's what you're going to see with a lot of these, these archaic companies like Macy's. You even look at Nordstrom. I mean, Nordstrom just recently opened a shop in Beverly Hills where there's no clothes at all.
Yeah, I heard about that.
Right?
The local
So
one.
I don't know what they do in there. They probably serve you coffee or a cocktail, and they pull out an iPad and they let you buy some clothes. But it's interesting, So that's an innovative strategy, and I think you need to see more things like that in order for these retailers to survive.
All right, but you like boring, so we'll end it there for now. Mark Tepper, Matt Maley, thanks for joining us here on Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.